If you've ever traded a normal RSI or a basic stochastic, you already know the pain. In calm markets, they work fine, but the moment volatility spikes, those oscillators get pinned at the top or bottom and they stop being useful. You end up buying overbought for hours or selling oversold into a move that keeps dumping, and it feels like the indicator is always late. That's exactly what the Stochastic Z-Score by AlgoAlpha is built to fix. Instead of using a fixed range that breaks when volatility changes, this indicator starts with a Z-score, which is basically a way to measure how far price is from its average in standard deviation units. In simple terms, it tells you whether the current move is normal for this asset right now, or statistically stretched and extreme. Now, before we jump in, you can use this on any market and any time frame you want. In this video, though, I'm going to be using GBPJPY on the 5-minute chart because that's where overextension happens fast, and you really feel the difference when an indicator adapts to volatility instead of fighting it. To follow along, go to TradingView, the platform I'm using to chart and test everything. If you don't have an account yet and you want the same setup, there's a link in the description you can use to sign up. Once you're on TradingView, open GBPJPY, set your time frame to 5 minutes, then click Indicators and search for Stochastic Z-Score. Select the one by AlgoAlpha, and once it's on your chart, this is the exact kind of layout you should be seeing. So what are you looking at? Down at the bottom, you'll see the main oscillator line. This line is the stochastic processed Z-score, and it's designed to react to sharp imbalances, but still stay smooth enough that it doesn't whip back and forth in choppy conditions. That smoothness comes from whole moving average smoothing, which is known for reducing lag while staying responsive. On the oscillator, you'll also notice clear zone levels that matter a lot, the +2 bands and the +2.5 bands. Think of +2 as your warning zone, where momentum is stretched beyond what's typical, and +2.5 as the rare air zone, where price is extremely extended and you should be on alert for exhaustion. The indicator is built around these thresholds, so you can separate normal momentum from statistically extreme momentum without guessing. Now, you may also see a colored histogram in the background, depending on your settings. That histogram is the raw Z-score intensity visual, and it's optional, meaning you can turn it on when you want more detail, or turn it off if you want a cleaner chart. When it's on, the gradient helps you see how strong the deviation is underneath the smoother oscillator line. So you're not just trusting one line, you're also seeing the pressure behind it. There's one more key component that makes this indicator feel smarter than a normal oscillator. It includes a long-term momentum filter built from an ALMA smoothing of the Z-score. ALMA is a moving average style that's designed to smooth while reducing lag, so it works well as a trend context filter. The job of that long-term line is simple. It keeps you from taking pretty reversal signals that are fighting the bigger push. In other words, the short-term line can scream reversal, but the long-term line is the one that asks, yeah, but are we reversing with the market's momentum or against it? And that's where the on-chart signals come in. When the indicator sees a real setup, it prints reversal markers, which show up as an up arrow for bullish reversal conditions and a down arrow for bearish reversal conditions. The important part is those arrows are not random. They only appear when the short-term shift happens in an extreme zone and the long-term momentum filter agrees with the direction. That's the whole point of this tool. It doesn't just show you oversold, it tries to show you oversold, turning, and supported by context. Now, let's go into the settings because this is where you tune it for GBPJPY on a 5-minute chart. Open the indicator settings, and the most important input is the length. This length controls the lookback used for the Z-score baseline, meaning it affects what the indicator considers normal for this asset right now. If the length is too short, the baseline changes too fast and you can get noisy signals. If it's too long, the baseline becomes slow and you may react late on a fast time frame like 5 minutes. AlgoAlpha specifically notes that you should adjust the length to match the asset's volatility, and GBPJPY is definitely one of those pairs where you want a length that's stable but not sleepy. You'll also see settings or toggles related to the Z-score histogram and visual features. If you want a clean chart, disable the histogram. If you're still learning the indicator and you want to understand what's happening under the hood, enable it so you can see the deviation intensity. The bands at +2 and +2.5 are the key interpretation zones, and they're the reason this tool is so clear. Inside the +2 range is mostly normal momentum. Outside it is where you start treating the move as stretched, and once you're pushing towards +2.5, you're officially in the extreme zone. You can also set up alerts. The script supports alerts for key momentum events like direction changes, zero crosses, and when price enters those overbought or oversold zones, which is perfect if you don't want to stare at GBPJPY all day waiting for the rare extreme setups. Now, let's talk about how to actually trade this in a way that stays simple. We're going to focus on a clean reversal approach because that's what this indicator is best at, spotting when a move is statistically stretched and the momentum is starting to shift. For a buy setup on GBPJPY 5 minutes, you want to see the oscillator deep in the negative extreme area first. Ideally, it's below the -2 band, and if it's closer to -2.5, even better, because that tells you the sell-off is getting statistically rare. Then you wait for the short-term oscillator to turn up, meaning it starts rising from that extreme zone. The next filter is the long-term ALMA momentum line. For the cleaner, higher confident long, you want that long-term momentum to be above zero, or at least clearly shifting upward, because that tells you you're not trying to catch a falling knife in a bigger bearish environment. When those conditions align, you'll typically see the up arrow print as a pay attention moment. Your entry is not the second you see the arrow. Treat the arrow as the signal to zoom in on price action. On a 5-minute chart, I like waiting for a simple confirmation candle, like a strong bullish candle that closes with clear intent, or a bullish engulfing pattern after the arrow appears. Once you get that, you can enter the long, place your stop loss just below the recent swing low that formed during the extreme dip, and then target something realistic. On a 5-minute chart, a clean way to keep it consistent is to target 1 to 1.5 times your risk, or target the nearest clear resistance area where price reacted before. The goal is not to predict the entire day's move. The goal is to capture the snapback that often happens when price stretches into a rare zone and momentum starts to rotate. Now, for a sell setup, you flip everything. You want the oscillator pushed up into the positive extreme area, ideally above +2, and again, closer to +2.5 is where it gets really interesting, because the move is statistically stretched. Then you wait for the oscillator to roll over and start falling. After that, check the long-term ALMA momentum filter. If that long-term momentum is below zero or clearly shifting down, that's your context confirmation that the bearish side has support. When those conditions align, the indicator will often print the down arrow as the reversal marker. Just like the long, don't auto-enter just because you saw the arrow. Wait for price to confirm. On GBPJPY, a clean bearish close after the arrow or a bearish engulfing candle is often enough. Then you enter the short, put your stop loss just below the recent swing low that formed during the extreme push, and again, target 1 to 1.5 times your risk, or target the nearest support zone. On a pair like GBPJPY, moves can be fast, so protecting your downside with a logical stop is what keeps this strategy from turning into gambling. Now, a quick word on expectations, because this matters. This indicator is powerful, but it's not magic. It's built to highlight statistical extremes and momentum shifts, but in real trading, news events, sudden liquidity gaps, and fast spikes can still break any signal. The real edge is that you're no longer guessing what extreme means. The Z-Score framework measures it relative to the asset's own behavior, and the smoothing plus the long-term filter helps reduce the number of low-quality reversals you'd normally take with a basic oscillator. This is not financial advice. Everything in this video is for education only. Always test on your own chart, use risk management, and make sure your entry makes sense with actual price action before you place a trade. If you found value in this and you want more videos like this where we break down indicators in a way you can actually use, hit the like button and consider subscribing so you don't miss the next one. Thanks for watching. See you next time.